right, guys, what is going on? Welcome to the live stream. Hopefully you guys had a good weekend. Hopefully. Let me know. Yeah, let me know. Let me know, Scott, Eberneth, Slowly, Mark, man, I don't even know how to say that. M, I guess. Felix, Nicholas, Willow, Roberto. Willow, welcome back. I think you were gone last week. Dad duties, probably. We don't know. We make educated guesses around here. Pretty lucky, too. Right, Roberto? Julius? Lots of family time and more monster trucks. Last week was a hardcore dad week. See? Always thinking probabilities, my friends. Your boy is allergic to being wrong. Sorry. All right, that's enough. We gotta get the ego out of the way. Sorry. It's always an issue. Sorry. I apologize. Was good, David? Can you guys believe, dude? 3,800 plus likes on that post on my Instagram about the chart colors. Isn't that crazy, dude? I've been posting on Instagram for like a decade. I'm trying to give out value, this, that, and the third. And the most viral post that I ever get is chart colors. Are you... I'm about to quit Instagram, dude. I'm about to get off Instagram. Like, that is so crazy to me. That's absolutely bonkers. Mind-boggling. Nobody cares about anything except the color of their charts, man. Priorities. Priorities, chat. Priorities. Get it together. David, you can drop your questions at any time. Just don't spam my chat. What's good, Jorks? What's good, G? It really sad. Nah, it is. It is sad. I mean, it's funny. It's cool. Yeah, you're a silver now. Look at that. What's good, money? I don't know how to say that either. But yeah, that's the thing about social media, man, is like I'll put it to you this way. Videos that I put the most time and effort into get the least views. The videos that I don't care about and I don't put much work in get the most views. And it's the same on Instagram. You know? I'll make these infographics with stuff and, 50, 100, 200 likes, whatever. I make a post on chart colors. Bang, almost 4,000 likes. 2,600 shares. Like, sometimes, man, I just hate social media. You know? If we weren't here, like if I didn't have a YouTube channel and a community, dude, I probably wouldn't even be on social media. You know? I like helping people. And it's definitely fun and very rewarding, but like, man, dude. Social media is my least favorite thing. One of my least favorite things now. It used to be really fun. Now it's just doo-doo. Doo-doo McGee. You feel that? Yeah. It's the algo messing with you. The algo's... The price delivery algorithm is doing price delivery algorithm things. Social media is a different story. But it's all ran on an algorithm. Everything's an algorithm. You think it's not, but it is. Absolutely everything is ran by an algorithm. Everything. 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 Nothing is random. Nothing is, there really is no free market. Now, sure, you might have like farmers markets and stuff like that. Look at what they're doing. Matter of fact, speaking of grocery stores, let's go off the deep end for a minute. Let's put our tinfoil hats on for a second. Have you guys noticed that the grocery stores now are no longer using paper tags for the price? They're putting these little screens up there. Dynamic pricing, they're calling it. They're changing the price on your ass like a chart. You walk into the store, your bananas are 72 cents. And by the time you go check out, there's 82 cents, What is that, bro? What is that? That's crazy to me. But, street lights, all that stuff. I mean, I've listed out everything that's ran by an algorithm, and the list is so long. So to believe that the markets are also not algorithmic is like literally stupid. You know what I mean? Like literally it's outright autistic to be like, oh yeah, this is all random. Okay, I did point out London's low. There was no specific asset. I think Dow had already traded there. So the only other two indices were ES and NQ. Okay, so there's 1050, there's 1110. When did we get our run below London's low? 1107. That's within that time window. But algorithms don't exist, right? Macros don't exist, but it keeps trading to levels we're calling out beforehand in time windows that repeat. It's crazy. It's absurd to say like, oh, algorithms don't exist. Well, what was it that George Orwell said? The party told you to deny the evidence of your ears and of your eyes and ears. It was their most important, most essential command. Stupid. So, anyway. Matter of fact, but do this though. We got like 40 something people on here. Do this. Drop a 1 in the chat if you guys have seen that. If you've actually seen the grocery stores with the dynamic pricing. Seriously. If you type it into Google, I'm getting some articles that are coming up, and one of them from ABC News says Maryland became the first state to ban dynamic pricing in grocery stores. So an AI overview says that grocery store dynamic pricing, or algorithmic/surveillance pricing, uses AI and digital shelf tags to change prices instantly based on demand, inventory, and consumer data. Major chains like Walmart, Kroger, and Whole Foods are adopting this technology. While it can reduce food waste, concerns exist about price surges and personalized higher costs. Yeah. Y'all think it almost sounds made up, but it's true. The Kroger that I go to has this shit now. It's scary. Only one of you have seen that? Dude, you guys got to wake up. You guys have to wake up or you're about to get slaughtered. Seriously. Look it up. Go into Google. Look up dynamic pricing. Matter of fact, while you're at it, look up glyphosate as well. You'll never trust anything you ever eat ever again. You want me to ruin your day? Go look up glyphosate. Glyphosate. Welcome to the crunchy side. Welcome to Team Crunchy. I'm good, Eric. I'm blessed, man. You can't complain. It's been really good days for driving too. Yeah, well, I just, me personally, I don't care for the entire East Coast. Florida's all right, but it's just humid and overcrowded. So I really don't care about anything on the East Coast, honestly, especially New York. Wasn't Walmart going to do something like that? Yep. It was good, Marshall. Love your live streams. Honest, real, and inspiring. Thanks for showing up every day. Oh, of course. Every day except Thursday. Every day except Thursday for you guys. Of course. I love this stuff, man. And I hope you guys learn to love it too. You know, I can't force you to, you know, I can't teach passion. There's plenty of things I can't teach. You know, passion is one thing and experience is another thing. You have to get that on your own. I can only do so much for you. You have to take it the rest of the way. But I appreciate it. I'm sharing a bunch of stuff on Instagram. Matter of fact, that's a good segue into the video that I released yesterday on journaling. I gave you like 5 or 6 different type of journals. There's the planner, which is, I have right here in front of me. The commonplace one, that was the last one that I shared. Both of those are Leuchtturm 1917 or something like that. It's a German brand. Dude, Germans have the fucking game on lock, dude. Like, what is it? It was the other thing I can't think of. But, like, the actual, what is it called? These notebooks? Bro, there's, like, not a better brand of notebook than that one. Seriously. And I want to say Rotering. I don't know if they're German or not. But yeah, y'all got it. Y'all got the game on lock when it comes to that. Absolutely incredible. Yeah, slowly. I don't really know what that means. But we're getting a nice Corvette candle that nobody could have ever predicted. Everybody wants to react and not predict. So that's cool. Anyway, I mean, you've seen this on your screen like this whole time, but back at 11:25, I said print a retracement and then jam it higher to internal range highs to get shorts out who stayed too long. That's what I would do. So sure enough, we got the retracement, and now we're getting that jam. Oh, I mean, this could turn over and trade lower and make me look like an ass, but you know, at you know, when it comes to, again, probabilities, like the probabilities that this is going to go lower versus going up here is just, it's likely to go higher than it is to go lower. But anyway, yeah, I shared that video on journals. So there was the planner, there's the commonplace book, there's the pocket notebooks, which are great for traveling. There's the 1 line a day journal, which is good for, like, if you suck at journaling and you want to get into the habit, I would recommend the 1 line a day journal. They even have a custom one for moms. So if there's any ladies out there and you're a mother, you can get one of those, which is cool. I don't have that one, but I'm assuming it's either pink or, you know, something like that, I guess. I shared the leather handmade ones. Those are great. They're expensive, but they're nice. Dad's getting no love. Yeah, GG. GG. Did you catch anything on currencies lately? No. No, not in the last couple days or couple weeks. Currencies are not my favorite. Indices are. Index futures are. Obviously, you can see why. I don't need to explain that. But, you know, that reminds me. Although this stuff is all the same, price is fractal, and it does the same thing on every time frame, on every asset class. There is subtle differences. There's like timing differences. There's volatility differences, you know, stuff like that. There's even like seasonality as well, which affects macro perspectives, not intraday macros, but like long-term macro. But outside of those things, it all does the same stuff. However, I am much better at trading indices than currencies. So when it comes to circle of competence, that's what I want to stick to the most. Now, if I can't find an opportunity, you know, or something that I can frame high probability, then I might go look at metals, or I might go look at currencies. But it's going to have to be a really, really clean setup for me to take that. Everything's the same. Learn that lesson on eBay and Intel. Dude. Man. Intel. I got to tell you, dude. I got to tell you, man. Intel has been an absolute beast. Look at that monthly candle, dude. Look at that, from 44. Look at the open, high, low, close information. The low is 44.98 and the high was 95. In 1 month. In 1 month, it more than doubles. Love that, dude. And this is nice. You know, I can't really say anything different. eBay, same thing. Not the same gains, but you know, when will the luck run out? Oh, luck ain't run out yet. Luck hasn't run out yet, baby boy. We are still in there. In there like swimwear, baby. All-time highs again with the gap up. Banger. Love that. So this is stuff like this is why it's easier to like not day trade every day. When you've got trades running in the background, it makes, you know, easing off the gas a little bit easier. You know what I'm saying? And that was just too dirty. Where's my tweet, dude? James all the way over there. And I may have accidentally called out the high of the day. Equal highs. Maybe, maybe not. Not that I tried to do that. It's like literally the open. We're like 3 minutes into the open. And I'm like, yeah, that's a partial easy. But yeah, like this stuff, dude, I'm telling you, it's not that hard. You know, trading, people think trading is like this massively difficult thing. It can be. If you don't know what you're doing, if you don't learn from your mistakes, yeah. But watch us jam that fucking high, dude. Freaking high, sorry. Watch us jam this freaking high. We got to do it. What is this? $238.25. I gotta update that on sent that out for Stoic Society as well. If you took that, you're up, baby. You're up. So anyway, we'll keep watching this, but what questions do you guys have? I don't have really a lot for you off the top of my head today. We can go over a little bit of stillness, but it's just, look, whenever you get to the charts, okay, if there's any day of the week that you need to be careful on, okay, if you don't know this, you gotta write this down. One of the most trickiest sessions is Monday AM session. Equities open first 30 minutes, and the entire AM session can be typically the most tricky with indices. And the theory comes all the way to one of the GOATs, Larry Williams. Mr. Larry Williams. And his theory was that traders, want to trade, right? And since they can't trade on the weekend, Monday equities is like the chance to get in, right? Obviously, like if you don't trade like Sunday evening or like London, something like that. But for the American traders, it's like equities open is our session. So coming off of that weekend, all these, traders are excited to trade. That to me is what can make Monday tricky, right? Whereas Tuesday is a little bit easier on average because now that Monday has printed, going into Tuesday, now we have Monday's information, Monday's high and low, something like that. We got a little bit more to work with. So drop a 2 in the chat if you guys understand that. It's not really like something that's verifiable, but I do agree with it. Like a lot of the times Mondays, or if Monday's a federal holiday or a bank holiday or something, and then Tuesday is like the next trading day, same thing. It's basically whatever day in session is right after a long period. So 3-day weekend, like Monday, or excuse me, like Friday, Saturday. I can't do math. A 3-day weekend, like, or 4-day weekend. Fuck, man. Saturday, Sunday, and then Monday happens to be closed. Then it goes to Tuesday. Okay? And that would act like the same thing as Monday's AM session, where I would stay out, personally. So, but now let's get into a little bit more details, right? Like why would I say something like this? Why would I say retracement and then expand it higher? Well, number one is going to be the phases of price. I mean, that's one of the easiest things to look at here. Okay, there's your V-shaped reversal. What have I taught you about that? After the V-shaped reversal is a what? Read the tweet. Retracement. After retracement is what? Well, I didn't say expansion, but I did say jam it higher. To internal highs to get shorts out who stayed too long, aka trailing stops. So after retracement is what? Expansion higher. You see that? See how this is multiple moves in advance, and people tell me, oh, you shouldn't predict, you should react. Yeah, you don't know shit, buddy. You don't. Respectfully, you don't know what you're talking about. Okay? You don't. You may not be able to predict. I might be a different story. Okay? And so are you as a mass community, because now you have the formula. And see, man, fuck. This is like one of the most frustrating things. This is so easy. Do you guys like understand that? Specifically when it comes to the phases of price, okay? There's only 4. Consolidation, reversal, retracement, expansion. Like it's just those 4. And just like market maker models, they go in order. They can't like not be out of order unless there's manual manipulation, sure. But the 2 formulas I gave you were expansion, retracement, expansion. That's one of them. And one of the easier ones is reversal, A or V. In this case, this is a V-shaped reversal. Reversal, retracement. Look at the speed on that. We had expansion lower met with expansion higher, right? So that expansion higher. And then this is a slow burn. That's a slow retracement. Bang. Now we see expansion. It's a 1, 2, 3 formula. Literally, it's that easy. V-shaped reversal, retracement, expansion. So to say that you shouldn't predict is literally stupid. It's literally stupid. Oh, I want to react. You want to react and be late. You want to react and you're going to be more emotional about your trade. It like, bro, You gotta have some logic here, man. You gotta have some critical thinking here, man. It's only on practice to see it over and over again. Right. Well, this is why I stream for well, it's 3 times a week for free now. It was 4 for a long time, but even on Fridays we have the member only live stream, but still it's like, okay, 3 times a week I'm on here showing you guys the same stuff over and over and over again. It's literally the same stuff. Now we might go over different topics. You know, we'll do journaling one day, we'll do market maker models another day, we'll do propulsion model study. You know, we'll go over different topics, but ultimately it all leads to the same stuff. As long as you're trading within a market maker model framework, you're gonna rate price. Okay, excuse my language, but you're gonna body price. Okay, period, point blank. And you're going to do stuff like this, predicting multiple moves ahead of time, in advance, okay? Time traveling wizardry. That's going to be you. That's going to be you. In the same way. Because this is how markets operate. This is how they're coded. See, that's the issue. One of the first principles, okay? If we were to like build this house, okay? Every house has to have a foundation. It has to have a solid foundation, right? It's biblical too, okay? That was the story behind the 3 little pigs, right? The pigs put a house on sand. The wolf came by and was like, nope, gone. They said, all right, we're out of here. They made a house of sticks. Didn't work. Then they finally made a house of bricks, and I think that worked, right? And in trading, it's the same thing. What are your first principles? What are your foundational beliefs? That right there, people get built on rocky foundation. I mean, rocky isn't shaky. They get put on this foundation that is sand. Okay? Believing this is all supply and demand is not a solid foundation. Believing that it's algorithmic, that's a solid foundation. Because now you understand how highly it's controlled and how highly precise you can actually be. It doesn't make sense any other way to me. Okay, again, these are just my opinions. It's my interpretation based off of what I've done, what I've seen, what you've seen me do, and all that. Okay, so I see that sort of lack of foundation in a lot of in a lot of traders on Twitter. Okay, I do not believe in reacting. I believe in predicting, and that's why I do it for you. If I couldn't do it, then I would flop all the time, and I'd be like, oh yeah, bro, nobody can predict price. Bitch, I'm out here every fucking week doing it. You know what I mean? If I'm out here every week doing it, then there's consistency in that, which means there's validity there. It's not random 50-50. Okay, I'd be right half the time, wrong half the time. That's not what you see. Okay? So, although I'm not always right, still may not be right here, because we're kind of just fiddle farting around here. But the point is stack probabilities. And if you believe it's all random, then you have no justification for discernment. And you're going to want to trade mechanically, as in whatever setup you like, you're going to take that setup every single time. Right? The problem with that is man with a hammer tendency. You think every imbalance is worth shorting. It's not. You think every imbalance is worth longing. It's not. Some are going to be left open. Some are going to become inversions. Some, you know, some may tap and go. Some may hit 50% and go. Some may trade to the high end and go. Like, it's not that simple. You know what I'm saying? There's got to be some discernment there. But again, you can believe whatever you want. But to say, okay, I'm just going to find one setup. I'm only going to take that. I'm just going to let the math do its thing and, you know, hope it works out in the long run. Well, then you better pray and you better hope that you have the absolute utmost discipline possible there is. That's the only way that's going to work. That's the only way. So I'm not the type of person that's going to do that. I'm not going to take the mitigation model and try to form fit it everywhere. That's not how it works. So anyway, if this comes all the way back down here, that's going to be wild to me. So we'll see what we do here. You know, we really haven't looked at NQ. Oh, you dog. You dirty dog. That internal high here was already taken. Like, these highs here were already taken on NQ. Oof. Didn't see that until just now. So either this is going to have to catch up, or we're just massively weak and we'll go lower. But let's do this. Now this is going to look, it's going to look like cherry picking, but it's not. Oh. That's one. Bang. Okay. You remember earlier I said it's all the same. It's all the same. Thank you, Mark. It's no different. It's no different. Massive sell-off, and you have your range, right? That was the high that was set. This was the low that was set. This high didn't come up to clear like all this stuff, but that is our like current high of the day, right at 950. Weird. That is London's low being swept right here. So this is our high that's set. This was the manipulation, right? So this becomes our range for today. So, and just like S&P, right? Phases of price, you have expansion lower met with expansion higher. That's a V-shaped reversal. Okay, or if your brush tool is trash, there's one called a path. Okay, bang. There's your V-shaped reversal. So what's after that? Print a retracement, jam it higher. We get our retracement, 25% level, bang, right up to that high. See that? And it's the same highs that we saw in ES. So obviously, NQ was the better play than ES. But nonetheless, they're both higher. And there it is. That, anything in here to that, or even like this high here, you'd be cutting your profit short. But nonetheless, that is a scalping opportunity if you are not short on the day. So you see how that works? This would have been a reversal trade. Buying something like this to go higher would be a continuation. Couldn't be me today. Couldn't be me today. But we'll see. What questions you guys got? What questions do you guys have? We talked about a lot so far. Talked about manipulation on London's low. We talked about V-shaped reversals. We talked about the two formulas that I gave you: reversal, retracement, expansion, and the expansion, retracement, expansion, right? And as well as expansion, retracement, anticipated expansion. Those are our two formulas, and it's so easy. It's so easy. Like, it's a 3-step process. Like, there's more of a process at McDonald's. Drive there, order it, get to the window and pay for it, drive off and eat it. There's more steps at the McDonald's drive-thru than there is with the phases of price. Like, come on. Ridiculous. When I see retail setup forming aligned with my bias, I think it will run their stops, but very often it holds and I miss the move. How do I eliminate that belief? I'm not sure. I'm not sure I understand your question, David. You see a setup forming aligned with your bias. You think it'll go higher for stops, but you miss a move. Yeah, I don't think I understand your question. If you're in our Discord, post a chart like with your RR on it, so I can kind of see what you're talking, because that sounds specific, and I don't think I understand your question. Yeah, Eric. I mean, personally, oh, I forgot to go over this. We can do it now. Why should this be the low? Like, why would I tweet here for this? And this should be the low of the day. It doesn't have to be, but I think it is, because that would be the manipulation phase, right? So if we have our original consolidation, we leave it, we come back into it and leave it again, right? This is why in here, what was I telling you in the Discord? Oh, I don't know, John. Don't look at it. Okay. So I don't know what timestamp it was, but it was right in here. I said London's lows on the chopping block. How easy is that? Why would that be? Because again, if this is a sell or a buy model, excuse me, if this is going to be a market maker buy model, and we have original consolidation, we left it and went lower, then we are bearish until manipulation. That's also predicting. So London's lows on the chopping block, bang, and then we get that right inside that time window that doesn't exist. That's the manipulation phase of a market maker buy model. So what's after that? The low risk buy. Oh, the retracement. Pretty retracement. Why should that be a retracement? Because that's a low risk buy. That's anticipation. Everything I fucking teach you is anticipation. Sorry. I know I said enough ego for today, but you know I'm a flawed man, okay? I'm a flawed man, chat. I have flaws, all right? So you don't have to write that down. But my point is, you have to see the bigger picture, okay? Zoom out. Market maker buy model. I know the screen's cut off, but that quite literally is the buy model. Think about it. It's right here. Consolidation, distribution, redistribution, manipulation. So right after manipulation is going to be our low risk buy and our first leg accumulation. And then we're going to have our second stage or second leg of reaccumulation for the original consolidation. So guess what? In here, bearish until manipulation. Gave you that in Discord. Bang. Got our sweep of liquidity. How do we know it's a sweep? Well, we don't know 100%. We don't know. We think in probabilities. But it sweeps the low in the time window. Yes, Willow, yes. I love you guys too. And there's a reason I teach you this stuff. Because it's phenomenal and it beats the fucking brakes off of whatever your mentor told you. Okay? All right, that was our last one. Nope, absolutely no more ego stuff the rest of the stream. That was the last one. I'm sorry. We're done. We'll clip it out. I won't clip it out. But that's manipulation. At a time window that we expect. So then what's after that, baby? What is after that? Low risk buy. And then first leg. So if we had our low risk buy or our first leg, what's the very next premium? It's either going to be a pool of liquidity at these highs. Well, if we're already beyond that, then it's going to be a premium level of liquidity. Okay? Premium level of liquidity. What about NQ? 50% is here. Where's a premium pool of liquidity? Right there. Bang. The market is quite literally obeying these screenshots. And this screenshot was taken, when is that? July 10th of 2024. But the algorithm's going to change, John. We're all learning it. If we all learn, it's going to change. No. No. That's not how this works. That's not how this works at all. But think about that. If it was supply and demand, then how is a screenshot from July of 2 years ago, right? How is price obeying that? How does that make sense? It's copying and pasting a blueprint from 2 years ago. But it's random? All the buyers came in. If all the buyers came in, then why isn't everybody tweeting at the low? If all the buyers were coming in, then we would all get together on Telegram, or we'd all get together on Twitter and go, all right, now we're going to buy it, we're going to buy it, we're going to buy it. But you don't see that. You see all types of mixed opinions in here. So it can't be that. Again, it just doesn't make sense to me. But nonetheless, that's why I tweeted that. And we're coming up on the macro now, but man, this is taking so long, dude. So long. It's a weekday. I didn't mean for the pun or the double entendre. It's a weekday, not just Monday as in a weekday, but I'm saying like it's weak as in it's not strong. It's not a strong day. Okay? It's a weekday on a weekday. You feel me? So that's why it's like I'm struggling to pump it. So we'll give it a few more minutes. But I mean, hopefully you guys learned something, dude. I promise you, or there's 65 of you on here. I promise you, if this is your first time seeing my stuff, okay, in all honesty, like, this isn't my stuff, okay? I didn't create this stuff. It was taught to me. There's quite a lot that was self-discovery. My mitigation model was self-discovery. I can't think of other stuff off the top of my head, but there is quite a few stuff that is self-discovery. But it might seem a little bit complicated at first, but this is why, and in all honesty, I pride myself on this. It's why when I gave you this years ago, I gave you all the details. I was not given the details when I was given this stuff. Okay? I was not given like what to expect here, how to know if we're here, or what to do here, how to trade this, how to trade that. I can trade every single stage you see here, all of it. Okay? I don't normally like trading original consolidations or right after it. If I'm on the sell side of the curve of a market maker buy model, I like the redistribution because it's going to attack a pool of liquidity. The RR is not going to be super great, but the probabilities are massive. The reversals are fairly easy unless you just get the low wrong. If the low hasn't been set, your ass is grass. I can trade the lowest buy, I can trade first stage, and I can definitely trade the second stage. But you do not have to be that way. But my point, every single stage has its characteristics. Every last one of them. Okay? And I have tried to give you as many details as I can without overdoing it. Distribution and then redistribution. This is bearish price delivery until something on a higher time frame. Whether it be like London's low or previous day's low, or, you know, something, daily imbalance or whatever, something on a higher time frame. Okay? It's going to seek liquidity on a higher time frame or sweep liquidity. Okay? And after that, this is always in order. Manipulation always sets the low. Low risk buys right after that. First leg, second leg. It always does this in order. It's never out of order. This is not a McDonald's ice cream machine. Baby, this is always in order and working properly. Okay? And that's something that you can rely on. Look at it. I rely on it heavily. Look at it. I'm tweeting multiple stuff in advance because that's what the market maker model calls for. If the stages are always in a row, then you will be able to predict because you know what the stages are. But if you don't know market maker models, you are going to have a hard time predicting unless you just stick to one little move, one little model that you have, like trading model or entry model that is repeatable, but only comes up every once in a while. This will be the last thing, because today is law 4. 48 laws of power. Always say less than necessary. So I violated that law like several times today. I'll just stream. But manipulation's an opportunity. Next candle's an opportunity. Inversion is an opportunity. That's 3. Balance price range. So this imbalance would be a 4. This imbalance would be 5. Longing at the open of 12 o'clock. That could be 6. So there's at least 6 opportunities in here so far before we even got to this pool of liquidity. That's 6 opportunities. 6. You don't need just one model. Okay? 2, maybe 3, and you'll do well. And you can always double up models anyway because there's time-based entries. So if you didn't get the price-based entry, you can always get the time-based entry too. Yeah, your mentor didn't teach you that. Okay. Sorry, that was the last one. It's slip of the tongue. I'm sorry. It's just, I know a lot of people don't teach this stuff. So now it's 12:51. So we'll see if our 1 p.m. macro can jam us up there or not. But it looks all right. Thank you, money. You're welcome, Eric. Listen, I could be a dickhead. Make everything member only. And just have a community of private students and never teach people for free. I can't do it. I can't do it. I can't. I would be, I'm not going to do this anytime soon, but I would be willing to go 3 member-only live streams a week and then 1 free live stream a week. I'd be willing to do that, but I can't force myself to paywall everything and not do something for free. It's not in my DNA, dude. It's not. I think gatekeeping information is, you know, you're a bitch if you gatekeep information. I'm sorry. It's just, that's what I believe. Okay. Really, really valuable information should not be kept hidden. Now, I'm not talking about like trade secrets, like, oh, I know the Pepsi recipe or something. That's different. I'm not talking about that. But when it comes to the markets and learning how to trade, you learning how to trade does not impede on anyone else's ability to trade. Does that make sense? Like, if I was a plumber and I owned a plumbing business, and then I went to my competitors and taught them how to do plumbing work, that there would be a conflict of interest there, because now if he knows his stuff or they know their stuff, and they might be competition now, and that could affect my business. So that's a little bit different. Trading specifically, you learning how to trade has zero bearing on price. All of us could come in here and buy S&P at whatever market. There could be 100 of us. There could be 1,000 of us. All of us could market order at one time. Wouldn't move price. Wouldn't move it. So there's no reason to keep it all a secret. None. None whatsoever. So hopefully that, I don't know. Hopefully that makes you feel good. Because I was not always like this. So great. Create another little set of highs. Well, geez, it's an abundance mindset, you know. Not to flex on you or anything, but a few months ago, I was on the phone with Paula Webb. Paula Webb is the wife of Mark Douglas, by the way. Rest in peace, Mark Douglas. And she had copyright. It wasn't her. It was like her lawyer or something that did a copyright strike on one of my YouTube shorts. And I called and I was like, hey, you know, is there something wrong? Like, what is the reason for, like, Mark is the GOAT, you know this, and I'm trying to promote his stuff. And she was saying because I didn't give credit to the, like, her website or something, that's why she took it down. And we're on the phone for like 30, 45 minutes. That woman can yap, dude. And she sounds just like Mark Douglas, by the way. I think they're both like from Chicago, or they lived in Chicago for so long. They just have that accent. It's crazy. But that's what she was talking to me about. She's like, I copyright strike this stuff, but I don't copyright strike the people who have the website like in their description or in their video or something to, like, you know, give us credit type thing. And it's the abundance mindset. So, you know, there's plenty of money for us to make. You learning how to trade won't move price, won't affect me in any way. Just like the trades that I take won't affect you in any way. And if you guys are trading on a like a prop firm, then yeah, you definitely won't move price because those orders aren't even going to the real market. So no bearing on price. So yeah. Okay, so David, I'm glad you asked that. You give me another talking point before we close it off here for today. The NCE, which is an acronym for Next Candle Entry, what that means is it's kind of similar to the video that it was an Instagram reel I posted about validating an imbalance. I told you can wait for the candle closures and simply trade the next opening candle. So, like in here, for example, when we looked at this, right? Because we were we pretty much watched this 5 minute almost the entire stream. ES knows that I'm talking to you guys about wanting higher pricing, and that's why it's not printing it. But just to give you an example, I talked about this imbalance right here. Okay. So we trade into it, and that is something that you can long if you want to. Now, if you had waited for this candle and you go, oh my God, that's a big bearish candle, that imbalance might not be valid. And then, whoop, comes back up here to close. You might think, okay, well, price is respecting this 50%. And that's what John was talking about for validating an imbalance. So at 12:35, once that candle closes, as soon as 12:40 opens, you can long that candle. That's what I'm talking about. It's the very next candle, whatever time frame you're looking at. Or if you really want to get jiggy with it, you can wait for the next 15-minute candle, which is this one. You see this 12:45 candle? So that starts a new 15-minute candle. And what's it do? Bang. Trades right back into this imbalance here and immediately away from it. So that could be an entry here. So you can trade on the way lower. You can trade that candle or that candle. And that's at least 3 different opportunities right here in front of you that you've been watching. We didn't have to trade it. You didn't have to trade it. I'm not pressing buttons here for you. But you're watching it. You're witnessing it. Because this is live price. And I teach with live price. But, David, that goes for everything. That goes for everything else. You might think, oh man, that 11:05, that's manipulation. Okay, next candle 11:10, that's a long. Okay, 11:15, maybe you waited for a new 15-minute candle, trades lower a little bit. Okay, right at 11:15, that's a long. If you think that's manipulation, you can trade that next 15-minute candle because it won't go down there. And so what you're essentially doing, I know we're kind of all over the place here with the markups, but what you're doing is right there. That 15-minute candle here, it is trading lower, but if that is in fact manipulation, it won't go to that low. That is a long. Or maybe you waited for that reversal. You go, oh shit, well, there's expansion lower, met with expansion higher. Okay, I missed it. All right, well, 11:30, that's a new 30-minute candle. That could be a long. We'll stop at this low down here. Now that might not be a good RR, because if you're aiming for this, or sorry, we were watching a 5 minute. If you're aiming for up here, you know, you might have a little bit less than a 1-to-1, and that's kind of not that great. But I think you get my point. It's whatever the next candle is on that time frame, or ideally you want to zoom out maybe 1 or 2 time frames. Okay? So yes, time-based entries are a thing, and nobody taught you that except me. I love that. Very, very few people have taught time-based entries. Very few. And I'm confident nobody did to you except me. But even if I'm wrong and they did teach it to you, that's good. But I pride myself on teaching you guys a lot of stuff that other people don't. So, sorry. It is what it is, man. You can't hide that. There is stuff that I teach that you just won't find many places. So spooling, the way that I understand, because I'm going to tell you, like me personally, I don't fully understand spooling. But whenever you see price like that, it's spooling. But I usually save that for like the final hour. So spooling is when the algorithm just takes price and keeps going and keeps going and keeps going and offers no retracement, no opportunity to get in. It's spooling. Think of it like fishing, like whenever you go fishing and, you know, you flick the rod, right? You flick your rod, all right? And that line going out there is coming off of the spool. It's spooling, right? That line is, right? That's what price does. And that is what the algorithm does. So, sorry, well, I had to throw an inappropriate joke in there. So it is what it is. But yeah, so next time you flick your rod, think about spooling. So we are 3 minutes into the hour. We just printed a new high here, which is good. It's looking like expansion. I was hoping we could get TP before the stream ended. Just so I can do a little I told you so. We'll see. Because the macro goes all the way from 1250 to 110, which means there's only about 6 minutes and some change. Oh, wait a second. 238.25. What's our high? 238.25. Ooh. She's playing dirty. She's playing dirty. Give me a little pop up there. Give me a little pop. Run it into this imbalance. Don't be shy. 8.25, 850. Who is your daddy? Who's your daddy? Retracement and then jam it higher. Retracement, jammed it higher, bro. Predict. Okay? I'm gonna react. Yeah, and the R in react stands for retard. Okay? Look at that. Look at that. Roger. That is a good way to end the stream, isn't it? You see how much fun we have here? Even if you're not a member, even if you're watching and you're not a member. Did you not have fun on the stream? Matter of fact, let me see. I'll open it for like 5. I'll open it for like 2 minutes. Give me a second here. I just totally forgot how to do this midstream. I'll open up the chat for anybody. Anybody. There's 44 of you. Did you not have fun? You're learning. You're watching price going to levels that I called out over an hour ago. An hour and a half ago. Is that not phenomenal? Does your mentor do that? Because this is fun to me. And this is why I do it. H, I don't even know what you just said right now. What does that even mean? You guys are strange. But all right, look, that's going to be it, man. Don't forget to read our book of the month this month is the 48 Laws of Power. See that? The 48 Laws of Power. Today's the 4th, which means you should be on number 4, which is always say less than necessary. You don't want to offend the wrong person. Now, me on YouTube, I don't give a fuck, man. If you're offended because I cussed, then go piss off. Go learn supply and demand. And you won't be able to do this shit. I really don't care. You don't want to be here, then piss off, dude. You're learning elite stuff for free. So don't complain. Bruce said it's insane. Soul said, yes, always learning more from your streams. Indubitably. So, y'all be good. Be blessed. Have an amazing rest of your day. I'll be here tomorrow on the 5th. Same time, same place. Same prize, baby. And, yeah, make good decisions.